Have you ever heard about people making money in the stock market and thought, I wish I knew how that works? Well, you are in the right place. In this video, I am going to break down the stock market in the simplest way possible. What it is, how it works, how you can start investing, and the mistakes you must avoid. Even if you never bought a single stock before, by the end of this video, you shall feel confident enough to take your first step. So grab a notebook because I promise this could be one of the most important financial lessons of your life. First of all, let's understand what is the stock market. The stock market is simply a big marketplace where companies sell pieces of themselves to the public. These pieces are called shares or stocks. Example, imagine your favorite pizza shop wants to expand. They need money to open new branch. Instead of taking a bank loan, they decide to sell thousand small slices of ownership in their businesses. If you buy one slice, you now own part of that pizza shop. When the shop earns more profit, the value of your slice goes up. That's basically how big companies like Apple, Microsoft, Tesla raise money by selling small pieces of ownership to the public. Number two, what do people invest in stocks? Now you might be thinking, why not just keep money in the bank? Here's why. Higher returns. Historically, the stock market has returned around 8 to 10% per year on average, which is much higher than a saving account. Dividends. Some companies pay you a part of their profit every few months just by holding their shares. Beating inflation. If prices of goods keep rising, your money in the bank loses value. Stock helps you money grow faster than inflation. So instead of letting your money sleep in the bank, investing lets it work for you. How does it work? The stock market works through stock exchange like the New York Stock Exchange or is Nasdaq. But you can't just walk in and buy, you need a broker. Think of a broker like a mobile app or website that connect you to the market. Examples are Robinhood, Fidelity, Charles, Schwab, and eToro. Here's the process. You create an account, you add money, you choose which stock to buy. That instantly matches you with selling that stock. If it's as simple as shopping online, but instead of buying sneakers, you're buying ownership in a company. Different types of stock. Now let's talk about the different types of stock. Yes, not all the stocks are the same. Here are the main types for the beginners. Yes, the beginners that they should know. Blue chip stock, large established companies like Apple, Coca-Cola, a stable but not super fast growth. Growth stocks, companies like Tesla or Nvidia that are growing fast, riskier but higher potential reward. Dividend stocks, companies that regularly pay out part of their profit, like Johnson and Johnson's. Penny stocks, very cheap, risky stocks. Beginners should avoid these because they can crash overnight. Understanding the types of stock helps you choose based on your goal. Now let's talk about how to start investing. Pick a broker, choose a platform in your country that has low fees. Decide your budget. Start small, even $50 to $100 a month is a fine. Research before you buy. Understand what the company does, how it makes money, and whether people will still use its product 10 years from now. Buy your first stock ETF. ETFs are baskets of many companies like the S&P 500, which contains 500 of America's biggest companies. Perfect for beginners. Uh, okay, and hold long term. Don't panic. When prices move daily, stocks are for years, not weeks. Remember, consistency is more important than timing the market. Now, let's have some example of investing. Imagine you invested $1,000 in Amazon in the year 2010. By the 2020, that money would have grown to more than 16,000 now. Not every stock will perform like Amazon, but this shows the power of long-term investing. Common mistakes beginners make. Here are some mistakes to avoid at all costs. Day trading without knowledge. Thinking you shall get rich quick. Most beginners lose the money first day. Investing money you can't afford to lose. Never invest your rent or emergency savings. Number three, chasing hot tips. Just because a friend, a YouTuber says a stock is good doesn't mean it is. Not diversifying. Putting all your money into one company, if it fails, you lose everything. Instead, build a balanced portfolio with a mix of companies and ETFs. Now let's talk about long-term mindset. The truth is the stock market rewards patience. Your price go up and down daily, but never the long-term trend has always been upward. Think of investing like planting a tree. You don't dig it up every day to check roots. You water, give it time, and years later, you enjoy the shade. That's exactly the how investing works. Now, what's the conclusion and plus call to action? The stock market lets you own small pieces of companies. It can grow your wealth faster than a saving account. Start with a small amount, invest regularly, and think long term. Avoid risky shortcuts, focus on learning. If this video helped you, hit the like button, subscribe for more beginner friendly investing videos. And yes, tell me in the comment section what's the first company you would ever invest in if you had, let's say, $100 today. Thanks for watching, and I will see you in the next video. Goodbye.